Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Friday, the 5th of January, 2007. And today we're taking another look at Harley Davidson. We had first looked at Harley back on October 30th. And October 30th, the stock was trading at about $67 a share right in here. It had just experienced a slight pullback that occurred actually on very nice volume pattern. That is, that the volume had diminished on that pullback, and we had all these rising moving averages. Now back then I thought the stock was a little bit extended and thought that the name of the game was defense, that is to protect profits. So at that point, although I didn't suggest any specific stock, so I can't take credit for anything, I would have thought that probably underneath these higher lows right in here, and then you would want to trail it up underneath successively higher lows. That's the way most people would look at it as far as trend traders. Another thing you could look at obviously is to just draw a simple trend line in, and we can see that that trend line broke, but after we already had seen a small series of first these lower highs, and then this point right here is where we first broke a lower low, and it would have probably been prudent to lock in the gains at that point. Now obviously that's hindsight, so if we look at the stock going forward, what it looks like now is we've got this prior trend line that was acting as support, and now it looks as though it's acting as resistance. Now this is a good lesson because a lot of times people think that you want to sell short as it touches that trend line, but these stocks can keep following up. It just means the rate of ascent isn't as strong as it was previously, and perhaps it's time to draw another trend line. I don't really see that as the case right now, but sometimes that's the point. We could maybe take something like this. Now that I'm not sure, you know, right now it looks like it could represent the trend, but what we want to do when drawing a trend line is not necessarily connect all the lows or all the highs, but capture the essence of the trend. And the essence of the trend isn't always found by drawing a straight edge trend line. Instead, what I like to use as well is the moving averages. I consider a stock innocent till proven guilty as long as the 50-day moving average continues to advance, and that's the case in here now. I also use moving averages such as the 10 and 20 day, like we saw right here, for purposes of saying it looks like indecision. At this point, the moving average is crossed over, again, after the stock had already made a lower low, so it's going to be a late signal. But when that occurs, what it signals is that the short-term trend, meaning the 10-day moving average, is now lower. The intermediate-term trend is lower, and the longer-term trend is higher. That represents indecision. The phrase that we always hear is, when in doubt, get out. Well, when we're getting conflicting signals from the trend, then perhaps that's a good time to get out. Now that would be more for your intermediate term traders. If you're a longer term investor, obviously the stock is still in a fantastic uptrend, and you might want to be a little bit more conservative with your stops. The fact is the stock broke out past this $63 level back in September or so, and it's been on this really nice tear since then. So whether you're in or out at now, I would think at this point the best place to put a stop for even longer term investors who are interested in protecting their gains and not afraid to pay taxes would be right around that $67 level. So for now, going forward, it looks to me more neutral than anything. And I say that because we've got these moving averages crisscrossing, sending us a conflicting signal. So I think that perhaps the stock needs to correct sideways through time now. Clearly on the weekly time frame, there's been no real damage done to the trend. However, this action in here does indicate, in particular with that heavy volume, that someone big was getting out. And a lot of times when you see that heavy volume decline followed by a diminishing volume on the rally, it makes the stock susceptible. So I'm going to pretty much conclude with the same thing I said last time, which is defense wins the game in here. If you have profits, don't let them disappear. Covered calls might be an option in here. I suggested that last time, or even just buying a straight out put to protect your gains.